Difference between stock and supply. Stock refers to the total quantity of goods available with producers at a particular point in time, regardless of whether those goods are meant for immediate sale or are stored for future use. Supply, in contrast, refers to the actual quantity of goods that sellers are willing and able to offer for sale to consumers at a given price and at a specific point in time. Stock is not measured with reference to time. It simply shows availability at a specific moment and is not expressed on a yearly, monthly, weekly, or daily basis. Supply, however, is always related to time and is measured over a period such as per day, week, month, or year. The stock of a commodity is measured at a specific point in time, such as on a particular date. Supply, on the other hand, is measured over a particular period of time, indicating how much of the commodity is offered for sale during that duration. Stock is not dependent on supply and can be greater or smaller than the quantity supplied in the market. Supply, however, depends on stock because sellers can only supply goods that are already available, making supply always less than or equal to the total stock. The level of stock mainly depends on production factors, such as the quantity of goods produced. Supply, in contrast, depends largely on price and market conditions, as sellers decide how much to sell based on prevailing prices and expected profits. Stock is static in nature because it is calculated at a particular point in time and reflects the total quantity available on that date. Supply is dynamic in nature because it is measured over a period of time and keeps fluctuating due to changes in prices, demand, and market conditions. The main purpose of maintaining stock is to meet unexpected increases in demand or to ensure continuity in production and sales. The main purpose of supply is to sell goods in the market and generate revenue for the seller. Stock has a wider scope because it includes all goods produced, whether they are intended for sale or stored in warehouses. Supply has a narrower scope since it includes only those goods that are actually offered for sale in the market. Stock is mainly affected by production. Any increase or decrease in production levels directly changes the stock of a commodity. Supply, on the other hand, is affected by stock availability, as changes in total stock influence how much sellers can supply to the market.